If I were starting to invest today in 2026, here is exactly what I would do, step by step. No hype, no guessing, just calm, proven strategies for long-term growth. Before investing, I would save 3 to 6 months of living expenses. This gives you a buffer for emergencies and prevents you from selling emergency investment at the wrong time. Many investors skip this and panic when markets dip. My portfolio would include US stocks through low-cost index funds, international stocks for global exposure bonds to balance risk. Diversification reduces the chance of losing money in the one sector and smooth out long-term growth. Next, I'll automate monthly contributions. Consistent investing beats trying to time the market. I would also rebalance annually to maintain my target risk. Finally, I will ignore market headlines and focus on my long-term strategy. Starting today doesn't require perfection, just a clear plan and a disciplined execution. Follow these steps and over time you will see steady growth. For more calm data-driven investing tips, subscribe and hit the bell.